So this video is dedicated to Mr. Pramod Namdar again. My previous video was also related to an email sent by Pramod. So this is what he writes: base formation in the daily time frame. This was sent on 22nd September. It's been a while. I wanted to make a video on this. So let's get on with it. He says, "Hi Rohit. Good morning, Rohit. Hope you are doing well. Below is a stock which is in a confirmed stage 2 uptrend, which is near to pivot buy range. So you see here the blue, the green, the red, the 50-day, the 150-day, and the 200-day. They are all aligned and all are sloping up, and the price is above the uh, all the three moving averages. That's the definition of a confirmed stage 2 uptrending stock. He has not mentioned the name of the stock because he probably wants to keep it confidential. And by the way, I'm a SEBI-registered research analyst. So please read my standard disclaimer in my video description. He has marked this base from here. I assume this is the 52-week high. So you have the green zone, blue zone, and the red zone. Okay, nice little base formed here. He's saying below is a stock which is in a confirmed stage 2 uptrend, which is near to pivot buy range. Pivot buy range, you see this blue, transparent blue shaded area above this 52-week high. That's the pivot buy range. So the high of this base is considering that as the weekly pivot point. The moment you say pivot buy, that's the weekly chart. But this to me seems to be a daily time frame chart considering the moving averages. So should I enter the stock if it enters the blue range, or wait for 0.4 to be created considering it passed all 5 kinds of analysis? So for you to understand this question, he's saying, should I enter if it enters the blue range? So if it enters the blue range, then on a weekly time frame chart, you have a trade, right? You can take the trade on the weekly time frame chart. This is a daily time frame chart that is confirmed by the fact that he mentions 0.4 to be created. So this is 0.1 in the base. Then probably this is 0.2 in the base. After this is the lowest point in the base, right? And then you have 0.3 in the base. So next candle, if it's a baby candle, or if the high of the next candle is below the high of the latest candle, you will have 4 points in the base on the daily time frame chart. So he's asking, should I wait for 0.4 to be completed, or should I buy the stock when it enters this blue range? Well, the answer is both. If it doesn't form 0.4, it directly goes into the blue range, then we can buy the stock on the weekly time frame chart, provided it's a positional trade, because you can't take a swing trade on a weekly time frame chart as per our framework. Now, if it does form 0.4, like if it refuses to go to the blue range and it forms a candle and then it forms 0.4, then we have a trade on the daily time frame chart. So my first priority is to pick up the trade on the daily time frame chart. If not on the daily, if it's not giving me a proper setup on the daily, I will buy it on the weekly time frame chart, considering it passed all 5 kinds of analysis. This is very important, because if the stock doesn't pass our fundamental criteria, you can't buy it in the blue range, correct? As per our framework. When he says 5 kinds of analysis, he's talking about liquidity analysis, comparative analysis, technical analysis, fundamental analysis, and market analysis, in that order. Okay. What I have planned is buy 50% as soon as it enters the blue zone with high volume, 40% above average volume. So he's saying that as soon as the stock enters the blue zone, he will buy 50%. So let's say he wants to buy 100 shares. So he will buy 50 shares as soon as it enters here on high volume. So he will have to look at the weekly time frame chart. If the volume is more than 40% above the average volume, if the volume on the weekly time frame chart is more than 40% above the average weekly volume, which is the 10-week simple moving average of weekly volume, Then he will buy the stock, considering that it is entered in the buying range and the volume is 40% above the average weekly volume. That is where he plans to buy 50 shares, which is not correct, by the way, because if it is entering the blue zone on high volume, you should take full position. Why to take 50% position, right? And rest I would buy at a retest of 21 DMA. This is wrong. He's planning to buy at a retest of 21-day exponential moving average. So he wants to buy half on a weekly time frame chart and half on the daily time frame chart. Don't do that. If you're taking a trade on the weekly, manage it on the weekly. If you're taking a trade on the daily, manage it on the daily, right? And pullback, this is a pullback trade, okay? The pullback trade you should take only when you already made money in the stock. So if you buy a stock, goes up certain distance, 15-20%, then it pulls back to a moving average. That is a potential buying opportunity because now you can move the stop loss on your original position to break even and you take an add-on position with a limited amount of risk. So never buy pullbacks on an entry. Pullbacks are subsequent buys in the same stock where you already have a position. So for those of you who are interested in pullback trading, you can go to YouTube, you can write Charles Harris, Richard Moglen. There is a interview taken by Richard Moglen. Charles Harris is a veteran pullback trader in the William O'Neill community. I think he worked with William O'Neill and company for more than 30 years of his life. He is known in the trading community there as a pullback portfolio manager. So he is a very good at pullback trading. So he has that presentation online. Watch that presentation. Moreover, you can do this only when the market is in a confirmed uptrend. So this statement is not correct. If the price enters the blue zone, if all analysis in your favor, you take the trade. You keep the stop loss, manage the trade. That's it. Don't do subsequent buys. Is my entry planning right here? No, it's wrong. Thanks and regards, Pramod Namdar. So that would be my analysis of the trade. So don't go with a half-hearted uh, kind of a mindset. If a stock meets your criteria, if it's going into the buy range with more than 40% above average volume on the weekly time frame chart, you get in, right? What is the reason to hesitate? If you're fearing a loss, then your reward to risk will take care of your losses. You don't have to worry about that. Okay. So you will, over a series of trades, our objective is to make a profit. What happens on an individual trade? That we don't know. Okay. Thank you so much.